Hi everyone, welcome to bonus module number 2, in which we're going to go over the topic of using indicator overlays on top of MACD itself, which is an indicator. So what's an indicator overlay? It's an indicator of an indicator, or put another way, an indicator twice removed from price action itself. So for example, if we're putting a 200 period EMA moving average on top of MACD, MACD is computed from moving average data on price itself. So if we're putting out a 200 EMA on MACD, we're putting on an EMA over top of a computation of an EMA. So it's we're getting kind of a little bit removed from price action when we do this, but it's okay because actually it provides some fairly interesting visual references for us. The standard MACD trigger is also an overlay when you think about it, because what we're doing to derive a trigger is to calculate a 9-period EMA on MACD itself. So we're in effect looking at alternate trigger lines, at least when the overlay we're considering is a moving average. Which is not the only type, as we'll see. So the uses of an indicator overlay are to, as I mentioned, provide additional kind of visual reference or optics for a reversal, to add further weight to our confluence of events approach. So in other words, if you have MACD crossing over an alternate trigger line at the same time as something else, it just helps us see that setup that much more clearly. And to provide alternate signals. So if we miss the first signal crossover, or trigger crossover I should say, maybe the second crossover gives us an opportunity to get in a little bit late if we miss the first best opportunity to get in on the move. So those are some of the uses for indicator overlays. And now what we're going to do is we're going to provide just a little bit of a diversion more for the newer traders. If you're interested in this approach, I'm going to just give you a basic how-to in terms of how to apply these indicators in the two charting platforms that we've been looking at so far, IT Finance and AccuCharts. Alright, so here we are in IT Finance, and I've got a price panel and a MACD panel with the default settings, as you can see. And so what I want to do is I want to add an overlay on top of MACD. So what you want to do is you want to take your cursor, hover it right over top of the MACD line here, the blue line, right click, select Settings MACD, and that will give you this drop-down menu. Go to the top left here, left click Add, and that will give you a subsequent drop-down menu with the list of available indicator overlays you can put on top. And it's a somewhat reduced list compared to the complete range of indicators you can use on price itself. Some indicators just do not work on MACD, and that's a function of their different types of formulas involved. The simplest and most effective, I believe, is a moving average. So I'm going to show you now how to put a moving average overlay on MACD. So just left click here, moving average, and you want to be careful with the defaults that are set here. IT Finance always defaults to a 20-period simple moving average, and as an overlay it always applies it for some reason to the histogram. I don't know why it does that, it just does. So you want to make sure you doctor this up right to give you the desired result. First thing I want to do from top to bottom is I want to change the color scheme a little bit. I'm going to choose green for an uptrend, bright red for a downtrend. I'm going to give it a nice thick line width and make it a solid line so I can really see it clearly as it bobs and weaves above the histogram. I want it to stand out a little bit. And I don't want a 20 period, I want a 100 period, and I don't want to use shifts. I just want to use an exponential moving average, and again I want to apply this on MACD, not on MACD minus signal, which is the histogram. So we've got all of our options checked, and we just click close, and there we have it. We have an indicator overlay directly on top of MACD itself. So of course if you wanted to do anything else, you would go through the same process. Just right click the MACD line, choose MACD, do the left click on add, and you can see you would just go through the same process of selecting which one you wanted, and then when it gives you the range of attributes, you can just adjust them as you like. So that's how you do it in IT Finance. Once you get used to it, it's extremely simple. It's a very simple thing to do. Now let's take a look at how to add an indicator overlay in the AccuCharts platform. Here we are now in the AccuCharts platform, and we're going to go through a fairly similar process for adding the indicator overlay. So first thing you want to do, again, hover your cursor right over MACD, right click it, and then you'll see in this dialog box, or whatever it's called, menu box, work your way up to Analysis Tools, then left click that, and what you'll see is the complete indicator list available from AccuCharts. It's mind-bogglingly extensive. It contains anything you could possibly want and then some. The nice thing about it is that it's alphabetically sorted, so just go through the list till you get to the M's, and the first one in the M section, or moving average section anyway, is moving average exponential, EMA. Left click EMA, then you will see if you're ever in doubt what the base is that the indicator is applying to, just look here under symbol. You can left click that. It's set to moving average convergence divergence. It's going to be applied to MACD, so that's fine. Now in parameters, what you want to do is you want to adjust the period setting. It's defaulted to 21. We want a 100 period EMA, so I'm just going to type in over top the number 100. And then you want to just make sure that the pane or the panel that it's going to apply to is defaulting correctly. So we want this to apply to the MACD panel, which is the second of two panels that we have showing in our chart. So that's correct. So we've got everything showing up more or less the right way. It's applying it to MACD. It's a 100 period setting, and it's going to be applied on the bottom panel. So then just left click Insert, close this box, and you now see an EMA on MACD added. Now what you might want to do is adjust the visual format of it. So just right click on the EMA line. In this drop down box, left click Properties. Then over here to the left, you can see bases. Again, that's just telling us what it's applying to, MACD. Parameters, just confirming 100. What you might want to do here is just play with the style selection if you like. So maybe I just want to make it a slightly thicker line. Maybe I just might want to change the color. I might just want to make this an orange line, so I click OK, OK, and it applies. So you can see now we have a 100 period EMA indicator overlay on top of MACD, and that's how you do it in AccuCharts. A fairly similar process in both charting platforms. Some platforms do not allow you to do this. I won't name them, but there are a few that I've looked at where this is just not a possibility. So if you're interested in this technique, these are two good charting platforms for you to consider. So some of the sample overlay indicators, these in my opinion are probably the best suited ones for using over top of MACD. Of course, exponential moving average, which we just looked at, a 100 period setting is really effective. You might also want to consider a 50 period as a possibility. 200 starts to get really, really flat, and often it's not really terribly usable. But 100 period is quite nice. And so the usage of this is to serve as kind of a higher level trigger line. We know that the default trigger is a 9 period EMA on MACD. By moving to a 100 period, we're now trying to really filter out a lot of the noise that a 9 period setting is prone to. A 100 period is that much more reliable. It's slower, but it's more reliable. So it gives you really a secondary trigger line. It also helps you monitor the overall bias of MACD. As long as MACD is crossed up and through it and remains above, that's generically bullish, subject to other elements of your analysis. Of course, another indicator that can be really helpful is TEMA, with the 21 period setting. TEMA is a triple exponential moving average, which does not mean 3 moving averages. It means that there's a very sophisticated smoothing process that's used. And it's fairly similar to EMAs, but again it's a more responsive line. It moves quicker. and then the traditional EMAs due to its unique smoothing formula. So the main use of that again is as an alternate trigger line. Bollinger Bands can be used on MACD, and through some experimentation I've kind of concluded that a faster setting than the default 22.0, those numbers, by the way, if you're interested, the first stands for the period setting of a simple moving average, which is the dashed line running between the Bollinger Bands, and the second number refers to the number of standard deviations on either side of that line, which then in turn give you the outer Bollinger Bands themselves. So these lower settings mean that we're looking for faster or more responsive signals from Bollinger, which is appropriate when using an indicator overlay on top of MACD. So Bollinger is a measure of volatility, and we can measure the volatility of MACD, which again is a measure of an underlying moving average on price. And you would just more or less work it the same way as you would on price. You're looking for tags and reversals. When price tags a Bollinger Band, then closes back inside, that can generically be a reversal signal, potentially. And similarly, when MACD tags a Bollinger Band, it works the same way. Finally, something that's not really an indicator, at least I don't believe it is, but it's a really interesting kind of visual tool, is the zigzag indicator. I don't believe it's an indicator because it self-corrects all the time, and that can be kind of tricky to work with. When you watch zigzag, what you see happening on the live edge of price is a leg from a swing point, and then it's bobbing and weaving as price moves up and down. So it often doesn't anchor itself until after the fact. So it can make it a little tricky to work with, but what's nice about it as an overlay is it's a window dressing indicator. It helps make the turns or swing points on MACD itself that much easier to detect. It just helps you read it. It's like putting on a pair of reading glasses if you're farsighted like I am. And so that's a list of some of the indicators that suggest themselves well to this application. You might have some others that you've looked at as well. Like I say, there's an awful lot of indicators that don't work with MACD, and you might be disappointed if you spend hours and hours trying them all out, but these are the ones that seem to work best, most particularly the 100-period EMA. So let's look at a couple of sample charts now and see how we can actually use them in trading environments. Here's the first example of our indicator overlays. It's a 100-period moving average on MACD. So I'll just first give you a quick rundown of what we're looking at. This is obviously an intraday chart. We've got daily pivots, which are these horizontal lines on price, of course. The 100 EMA on price, which is this purple line, and a 200 EMA on price, which is this gold-colored line. And that'll become relevant in a moment. We also have a 12.26.9 MACD and the 100-period EMA overlay on top. Now here's the text just in case you want to refer to it. But basically what we're looking at in this example, let's pretend that we're trading into this session with the new pivots right where my hover's cursoring. Did I say hover cursoring? I meant cursor hovering, sorry. Anyway, that's not a Freudian slip, it's something different. Anyway, price comes in. Fails initially to take out the central pivot, so what it does, it collapses, and it collapses down to Peter Bain's M1 daily pivot level, which is the half pivot between S1 and S2, and that happens in conjunction with a pair of tweezer bottoms, I guess, and a spinning top right on the 100-period EMA. So we're generically in the buy zone. And the first thing that happens on our indicator panel below is MACD crosses its fast trigger, the 9-period EMA on MACD, and then its slow trigger shortly thereafter. Now, this is quite a momentous event, actually, when MACD crosses its 100-period EMA. As long as it stays above there, and as long as that happens in conjunction with our EMAs on price, being aligned bullish, which they are, we can see the 200 EMA rising up and the 100 EMA above it rising up also, albeit slowly. As soon as MACD crosses above its 100 EMA, and remains above. It's generically bullish. So what we can do is we can use that information to read these little dips. As long as MACD remains above the 100 EMA, these dips may be fake-out crossovers, and we discussed that in, I believe, Module 3 or 4. So we can see here, for example, we have what looks like a bearish crossover, but that is a fake-out event, and you would have been blown out of the water if you used that to try use that signal to try and trade short. Because we can see after this touchdown on the confluence of M1 and the 100-period EMA, price was just continuously rising up and up and up. And I'm sure if we were looking at a higher level time frame concurrently, we would have found some indications of an uptrend in place. So what we can do with this is use this information and trade to the long side when MACD crosses back up and through its trigger, which is more or less getting back on track with these other trending indicators. The 100 EMA is now green. It's MACD is above it. The 200 EMA and 100 EMA on price are bullish, and everything's up, up, up. So you would read this as equivalent to buying a dip in an uptrend, and that's how you can kind of put this information together. So there's one use for the 100-period EMA overlay. It's just to help give you a kind of a higher level trending indicator of MACD itself, and used in conjunction with other things going on in your chart can help you find opportunities to get into the trade. Our next example is the same chart, of course, as you can tell, but now we're using a different indicator overlay. We're using the 21-period TEMA, or triple exponential moving average, and that is the red and green painted in line here in the bottom. Now you can see this gets to be like a bunch of sticky spaghetti noodles after a while. These all sort of tend to cling together when the market's going sideways, but when it's not, they tend to separate, and that can be used to your advantage. So TEMA basically functions the same way as either of the EMA triggers we looked at, the traditional 9-period trigger or the 100-period overlay. But the interesting thing about it is that it functions more quickly than both. You will get the crossover event on TEMA more quickly than you'll get it on the 9 or the 100-period EMAs, and you'll get the crossover events more quickly. So you can use those. If you wanted to, you could put all three on the same. It would get very busy after a while, but what that would give you is a 3 crossover system on MACD. You would have an early crossover MACD over TEMA, you would have a kind of a middle crossover MACD over its trigger line, and then you would have a late crossover MACD over the 100-period EMA. And you can see that flashed very quickly right down here where my cursor's hovering, and we got a correction crossover to the right as well when it crossed right back through both its 9-period trigger and the TEMA trigger as well. So just a quicker crossover type signal using that particular indicator overlay. Here we have Bollinger Bands on MACD, which is the series of 3 lines that I've painted in gray color here on the bottom. And this is another one where it starts to get a little bit messy, visually speaking, after a while. But if you can kind of train your eye for what to look for, it can actually give you some interesting signals. So what we're going to do is reference once again this interesting junction right here where price came down, collapsed in a counter trend direction down to the confluence of the M1 pivot and the 100-period EMA. So let's just assume that we knew, in this case, the tradable trend, the trend that we wanted to trade with, not against, was up. Something on the 1 hour, 2 hour, 4 hour daily time frames was telling us that. So what we want to look for is a case of MACD tagging the lower Bollinger Band and then tracing back inside, just the same way we would do it on price. As a matter of fact, I probably should have put the Bollinger Bands on price here. But anyway, we're going to focus on MACD. So when price went the wrong way, this counter trend collapse, you can see what happened. It was kind of very constricted in here, and then MACD went outside of the Bollinger Band, which is equivalent to a reversal tag, and then crossed back into the Bollinger Band. And when it did that, it was equivalent to a bullish crossover event. And of course, that correctly presaged this subsequent move up in price as MACD crossed right back into the Bollinger Bands. Now it crossed outside here a little bit, another tag event, I guess you could call this, but we're not interested in this because we know the trend is up. So we're not interested in bearish reversal tags. We're only interested in bullish ones. So knowing that the trend is up, and again our EMAs were telling us that here on price, the next event we would look for was MACD again tagging its lower band. Here it did so kind of weakly. This is more like a bounce than a tag, but it was good enough. And this is precisely the area where we saw, I believe, MACD crossing through its the TEMA line in the last example, and that again gave us a good clue to be thinking about a subsequent long entry. You can see we had kind of almost like an ABC pattern, A up to B, a little bit of a retracement, C up to D, and then we're getting another wave unfolding here. We had a leg up, a retracement, and now we've got MACD bouncing off its lower Bollinger Band and up and away she goes subsequently. So there in a nutshell is how you can use Bollinger Bands on MACD pretty much the same way as on price. It's just looking different because we're dealing with a line crossing through rather than individual candles. But that's it in a nutshell. It can give you a good secondary entry signal. And finally, the last of our 4 examples, we have the 50 setting zigzag overlay on MACD. 50 is a very, very wide setting for zigzag. You would never use that on price because you would just have a line that went forever. But on MACD, we have to use that broader setting to get some meaningful zigs and zags. So what we've got here basically, again, we're looking to know what the tradable trend is. So if it's up, we want to see kind of a swing point on zigzag. We want one leg down to reverse into a leg up, and each time it changes direction like that, that can be a helpful visual clue as to what's going on. It's a very hard indicator to trade with because it's always changing all the time. But when you get a really nice, really valid reversal swing point like this, zigzag will often follow suit. So you can see what happened here is we got the outline of a nice kind of ABC setup. And that wasn't quite so obvious on price, but on the zigzag overlay, it really mapped out nicely. So we had this swing point low where price came down to M1, and then an initial rally top here at the B point, which zigzag outlined on MACD very nicely. Price retraced again a little bit, and then we got a C point. So it wasn't as crystal clear to me looking at price action, but these clear linear segments outlined on MACD made it that much more obvious. And from the C point, we know what happens. This is an uptrend continuation pattern, so we're expecting it to shoot up. And that's what happened. So if there was some way you were able to combine all 4 of the indicators we looked at in the past couple of slides, you would have seen a really good reversal point here at this A level, and a really good continuation crossover type setup at this C point. And kind of all 4 of those indicator overlays in some manner or another picked those swing points. So that gives you kind of a good example of how to use zigzag. Just apply a nice wide 50 period setting, and it just takes all those kind of little blips and bleeps that MACD does along the way and just converts it into a more linear form, which is easier to read. So that's it for our 4 chart examples of indicator overlays, and that's it for this bonus module. This material, generally speaking, is something that you probably wouldn't want to touch until you feel comfortable just with the basic applications of MACD itself. Think of this as more kind of an advanced application. Not because it's difficult to use, it's just that it's additional clutter on your chart, quite frankly, and you want to be sure that you know how to read these indicators by themselves first before moving into this area. But they can give you good extra clues and visual reinforcement of what's going on your indicator. And I hope you found this useful. So next we're going to move on to the README primer for Module 3, which is the Chart of the Week archive, and I hope you enjoy it.